Hello and welcome back to my channel. Today I'm going to discuss the importance of DXY, which is the dollar index. Now, the dollar index is measuring the uh, value of the dollar against a basket of major currencies such as euro, Canadian dollar, Japanese yen. Now, in this graph, I'm showing a daily movement of the DXY against Bitcoin. Bitcoin is the blue line that you can see, and DXY are the green and red candles. So as you can see from the three boxes, whenever DXY has fallen down, Bitcoin has tended to rise, and when DXY has increased, Bitcoin has tended to fall. You can see from the third box that when in the last 4 or 5 days, when DXY started going up, Bitcoin started going down. Now, why this happens is because investors from all over the world are borrowing US dollars and uh, purchasing Bitcoin in US dollars. Now, when a dollar strengthens, they have to pay more in their local currency to cover their borrowing costs. So they tend to sell off the risky assets in order to cover their loans. So this is one of the reason why there is an inverse relationship. You would have noticed from the U.S. stock market as well that the Nasdaq and the S&P 500 has also fallen, and that could also be a reason where everyone borrowed U.S. dollars and then purchase stocks, and now they have to pay off their loans in their local currency, and so they are selling off some of those assets and to cover their loans and borrowing costs. This is very important to note. Uh, does it always have an inverse relationship? Not necessarily. There may be times when both are rising and at the same time, and both are falling at the same time. But generally, it has been observed that as the dollar index strengthens, the Bitcoin and risky assets tend to fall. The reason I'm discussing DXY today is if you are an investor, you would have noticed that there has been a sell off in major assets in the last 2 days. Yesterday, Bitcoin as well as the US stock market sold off. And that is why I'm recommending and suggesting that you look at dollar index when you make your purchases and sales, because there has been a correlation between major assets and DXY. There could be other indications as well, and many people have suggested that the AI trade is unwinding, and which is why major markets such as the Nasdaq and the S&P 500 is selling off. However, one of my things that I always look at is DXY to understand how the market will move. Whenever I find that the DXY is increasing, I know that there might be a sell-off in major assets, and I try to position my purchases accordingly. So that is all for me for today. If you like my videos, please don't forget to click on the like and subscribe button. If you would like to leave a comment, please do so in the comment section below.